Welcome to the Deep Dive, your shortcut to being well informed. Today, we're looking at a company that, it touches almost everyone's life in healthcare, often without them even knowing it. We're diving into McKesson Corporation's latest financial report that's for the first quarter of their fiscal year 2026 and the press release that went with it. Okay, let's unpack this, our mission. We're going to try and turn what looks like a stack of financial reports into a clear picture of what's really going on with this major player in the healthcare world.
That's right. And the sources we're digging into here are first their quarterly report filed with the SEC, that's the 10Q, and also their official press release. Right. Well, McKesson is a big one, a diversified leader in healthcare services. Their core mission is pretty straightforward, really, advancing health outcomes for patients everywhere. And they do this by partnering with, pretty much everyone in healthcare. Biopharma companies, care providers, pharmacies, manufacturers, governments, you name it. They focus on delivering insights, products, services, basically things that help make quality care more accessible and hopefully more affordable.
That sounds like a massive reach. What are the main business areas they actually operate in?
They break it down into 4 main segments for reporting. There's U.S. pharmaceutical, which is huge. Then prescription technology solutions, or RxTS, also medical surgical solutions, and finally their international operations. So yeah, this structure really shows you how broad their footprint is across that whole healthcare supply chain.
Okay, let's get into the numbers then. The first quarter financials, this is for the 3 months ending June 30th, 2025, compared to last year. And here's where it gets really interesting. We're seeing record revenues, but then a dip in net income. So what's going on beneath the surface?
Yeah, it's a classic case of needing to look a bit deeper than the headlines. Consolidated revenues, they did hit a record almost $98 billion.
$98 billion, wow.
Yeah, and that's a huge jump, 23% up from the same period last year. So really impressive growth on that top line.
Okay, but then, like you said, the net income attributable to McKesson, that actually went down 14% to $784 million from $915 million. And the earnings per share, the EPS, that dropped too. Seems odd with all that revenue.
It absolutely does seem counterintuitive.
And this is where, context is key. While their GAAP net income, that's the standard accounting principles number, while that decreased, their adjusted earnings per diluted share, that actually went up. Exactly. So the adjusted figures, they're designed to kind of smooth out those big, maybe one-off items and give you a clearer view of the company's underlying ongoing operational growth.
Right.
Without that specific hit.
Right. So it separates a specific challenge from the core business strength. And speaking of strength, or maybe confidence, their board approved a 15% hike in the quarterly dividend. It's up to $1.82 a share. And this is the 9th year in a row they've increased the dividend. What does that signal, really, that consistency?
That's generally a very strong signal, yeah. When a company consistently increases its dividend like that year after year, it usually means management feels pretty confident about future cash flows. They believe the company's financial health is solid enough to keep paying out more to shareholders, even while they're investing in growth. It suggests a stable, positive outlook.
Okay, so beyond just the quarterly numbers, McKesson's been busy reshaping its business too, right, strategically. What were the big moves this past quarter?
Oh yeah, they've been very active. M&A-wise, they completed 2 pretty significant acquisitions in Q1. First, on April 1st, they bought an 80% controlling interest in Prism Vision Holdings. That cost them $874 million in cash.
And Prism Vision does?
They're a major provider of ophthalmology and retina management services, so eye care. And that business is now part of McKesson's U.S. pharmaceutical segment.
Okay, one down. What was the other big buy?
The other one, completed June 2nd.
Second was acquiring a 70% controlling interest in Core Ventures. That stands for Community Oncology Revitalization Enterprise Ventures. That was a much larger deal, $2.5 billion. Exactly. It's about focusing. They already completed the sale of their Canadian retail businesses, Rexall and Well.ca, back in fiscal 25. And then just after this quarter ended, in early August, they announced they've agreed to sell their retail and distribution businesses in Norway.
Norway too, okay.
Yeah, so expect to see that listed as held for sale in future reports. And maybe even bigger picture, they also announced this quarter their plan to separate their medical surgical solutions segment.
Separate a how?
Spin it off into its own independent, publicly traded company. So if you connect these dots, the acquisitions in areas like ophthalmology and especially oncology, plus selling off retail in Canada and Norway and planning to spin off MedSurg, it paints a really clear picture. They're doubling down on core high-growth areas, particularly specialty care like oncology, while kind of trimming and optimizing the rest of the business portfolio. It's strategic refinement.
It definitely sounds like a focused strategy. Okay, let's dig a bit deeper into the operations then. What really drove those impressive segment revenues we talked about? And maybe unpack some of the specific challenges beyond Rite Aid.
Sure. Well, the U.S. pharmaceutical segment was the powerhouse. Revenues there climbed 25% to a massive $90 billion. That was driven mainly by higher prescription volumes from their big retail national account customers, and also strong growth in distributing oncology and specialty drugs. Those new acquisitions helped too, of course.
And what about their other segments, the tech solutions arm?
Right, RxTS Prescription Technology Solutions. That saw revenues jump 16% to $1.4 billion, mostly from higher prescription volumes in their third-party logistics and tech services businesses. Medical Surgical Solutions grew too, but more modestly, up 2% to $2.7 billion, largely from higher volumes of specialty pharmaceuticals in that segment.
And international. You mentioned they sold off some Canadian retail.
Yeah, international still managed a 1% revenue increase, reaching $3.7 billion. That was mainly from higher pharmaceutical distribution volumes in their remaining Canadian business. But like you said, that was partially offset by selling the Canadian retail part and also some unfavorable foreign currency exchange effects. A bit of a mixed bag there.
Okay, so strong performance, especially in U.S. pharma and RxTS. Now let's circle back fully to that net income dip. We know Rite Aid was a big piece, that $189 million provision for bad debts.
Yep, that was a major factor, hitting the U.S. pharmaceutical segment directly. That charge basically represented the money Rite Aid owed them from before Rite Aid filed for Chapter 11 again in May. It was wiping that receivable off the books.
Were there other significant operational impacts dragging down that net income number?
Yes, a couple of other things played a role. One is restructuring costs. They booked $47 million in charges this quarter related to ongoing restructuring initiatives. That's up quite a bit from $10 million last year. These are part of a bigger company-wide plan they started last year to, modernize their tech operations, improve efficiency, streamline things. They expect the total cost for all these initiatives to be somewhere between $650 and $700 million, running through about fiscal 2028.
So ongoing investment in efficiency, but it costs money upfront.
Exactly. And one other smaller item, they received much less cash from antitrust legal settlements this quarter, only $8 million, compared to $90 million in the same quarter last year. So that comparison also makes the net income look lower.
Got it. Now, beyond the regular operations and strategy, there's this huge ongoing legal dimension for McKesson, particularly around opioids. It seems like a constant presence. Can you give us a summary of where things stand with that complex litigation?
It is incredibly complex and, yes, very significant. As of the end of June, McKesson's total estimated liability, the amount they've set aside for all opioid-related claims, was $6.377 billion.
$6.3 billion. That's a staggering number. How much of that have they actually paid out so far under the major settlement agreements?
Well, under the big one, the settlement with 48 states, D.C., and the territories, they'd paid out about $2.0 billion as of June 30th. But there's still roughly $5.9 billion more to be paid under just that agreement, stretched out all the way to 2038.
Wow, that's a long tail.
It is. And then there are separate deals, too, like with Alabama and some parts of West Virginia, adding more payments over the coming decade. There was also a notable development recently in a case involving the city of Baltimore. A jury actually found McKesson liable back in November 24 and initially awarded about $192 million in damages.
Okay.
But then, just this past June, the court granted what's called remittiture and slashed McKesson's share of those damages way down to $37 million.
That's a big reduction.
A huge reduction, but McKesson still thinks they have valid reasons to challenge even that amount on appeal. It really highlights how volatile and multi-layered these legal fights are. Things can change significantly.
Absolutely. Are there other major opioid settlement groups besides the states?
Yes. They have agreements with federally recognized Native American tribes. They paid some, with more due through 2027. And there are also big class action settlements that have recently gotten final or preliminary approval.
One with acute care hospitals, McKesson's share is about $149 million. Another with third-party payers, their share is around $114 million. In fact,
Correct, not just opioids. There was a case, Omni Healthcare versus McKesson, involving alleged false claims related to oncology grants. The good news for McKesson there was that claims against their U.S. oncology unit were dismissed. That dismissal was upheld on appeal, and the Supreme Court decided not to hear the case. So, a win for them there.
Okay. Anything else major?
There's the True Healthcare Practice case. This one was about unsolicited faxes, believe it or not.
Faxes.
Yep. The Supreme Court actually sent that
case back to a lower court in June to reconsider class certification. But importantly for McKesson, the Supreme Court didn't overturn the earlier ruling that denied potentially massive
Interesting. So, a complex legal picture, but not all negative. Okay, let's look ahead then. Given all this, the revenue growth, the strategic moves, the legal backdrop, what's McKesson's outlook for the rest of fiscal year 2026?
Well, they actually raised their guidance for the full fiscal year. Their forecast for adjusted earnings per diluted share is now in the range of $37.10 to $37.90.
Raised guidance, and how does that compare to the previous year? What kind of growth are they projecting?
That updated range suggests growth of about 12% to 15% compared to fiscal 2025. And if you strip out some gains they had last year from venture capital investments, specifically from
Norway businesses we talked about, classifying them as held for sale.
Okay, that makes sense. So this brings us to the big so what question for you, our listener. Why does tracking all this detailed financial strategy, legal stuff for a company like McKesson actually matter in the grand scheme of things?
Well, understanding these reports, it really gives you a unique window. You get to see how these huge healthcare players are constantly adapting to market changes, how they're managing really significant legal headwinds, and also how they're trying to seize strategic opportunities. Ultimately, it offers a pretty crucial glimpse into the future of healthcare supply chains, drug distribution, patient access, things that, let's be honest, impact almost everyone in one way or another.
So we've covered a lot of ground. We went from, looking at these dense financial reports to uncovering McKesson's record revenues, their big strategic shifts, buying here, selling there, the significant financial hit from the Rite Aid bankruptcy, those complex and ongoing legal battles. And through it all, we're seeing a company that seems pretty confident about its future outlook, raising its guidance.
Absolutely. It really underscores the dynamic nature of this industry. You see this constant mix of pursuing growth, navigating pretty serious operational challenges, and also carrying these substantial long-term legal responsibilities from past issues.
So here's something to think about. How might these complex financial decisions, these strategic bets, and the outcomes of these massive legal cases ultimately shape the healthcare landscape? Things like accessibility, affordability, maybe even for you and your family down the road. What deeper questions does this raise about that constant balancing act between corporate growth and the broader impact on society? Something to consider. Join us next time on The Deep Dive.